Welcome. We will go over study problem 3-3 from chapter 3, page 85 in our textbook. So this problem is basically asking for the balance sheet of the firm. In order to answer this question, we should have a very good understanding of the balance sheet, obviously. The balance sheet is a financial statement which basically goes deeper into the accounting equation. Recall the accounting equation, which states that total assets equal liabilities plus equity. So, and another difficulty with this problem is given in the fact that all these balance sheet items are shuffled, so they are not in order. So it is our business to put them in order and come up with the balance sheet, basically constructing the balance sheet from scratch. Okay, so it is obviously wise to start with the left hand side of the equation, basically the total assets, and we need to recall that total assets can be split into two components. Basically, we should have current assets and fixed assets. When we think further into current assets, we would realize current assets have four major components, including cash. So I will just put a note here that cash is a current asset. Another one would be accounts receivable. It is a current asset. Inventory is another current asset, and other current assets would be the last item of current assets. So those are major current asset items. So I will open a new page, and on this new page I will start constructing our assets part of our balance sheet. So we mentioned that so let me write it, current assets, and I will try to align my dollar figures, include cash, accounts receivable, inventory, and other current assets. Going back, let me quickly check each of these accounts. Cash is $50,000, accounts receivable is $42,700, inventories is $40,000, and other current assets are $5,000. As I said earlier, I need to align my figures, so it would be wise to, let's say, that's the line of alignment that I have in mind. So I will try to align my numbers along this line. Cash is in the amount of $50,000. Then we have accounts receivable in the amount of $42,700. Inventory was $40,000, and finally other current assets are $5,000. So if I add up all these figures, I should come up with my current assets that I listed above. So let me go ahead and delete that entry from the top and then add it at the bottom. So I will use my eraser to basically delete all this. In fact, I can still leave the word assets because this is the asset side of things. So then this will give me my total current assets. And when you add up those four figures, you would get $137,700. $137,700. Now let's go back to our given numbers. So we are basically done with the first of these calculations, current assets, but we still need to handle fixed assets. And when we go back to the givens in the problem, we realize that fixed assets are provided, but only in the gross fixed assets format, so not the net fixed assets that I need. So net fixed assets is basically what I need here in the second item. So therefore I need to deduct depreciation, accumulated depreciation from that, which is on this line right here. So though the difference between these two given lines will give me the net fixed assets. So let's go to the next page again. And I will simply go slightly below. So make sure we keep in mind our alignment. So this is our alignment line, and let's start writing our gross fixed assets and accumulated depreciation. So we have gross fixed assets 1 million. That's a big number, decidedly big number compared to current assets, $280,000, and then less accumulated depreciation, which is a contra asset, as we would call it, less accumulated depreciation. So that's important, in the amount of $312,000. Because it's a contra asset, we need to put brackets around this number. Now the total of these two, or we would say difference because of the brackets here, will give us our net fixed assets. Fixed assets are things like buildings and equipment. So the difference between the two will give us $968,000. Now we are in the final step. Let's just, to make sure, let's go back. Let's see if we are missing any asset item. And I will use the highlighter to make sure to delete, kind of in a sense, the line that we have already used. So I have made already use of the cash. I already made use of accounts receivable. I have already used inventory. Gross fixed assets have been used. Other current assets has also been used, as well as accumulated depreciation. Now we just realize that there is an other asset item, which is other assets that needs to go into the assets as well. So let me make sure I don't forget to add that up as well. So going to the next page again, we have other assets, and in that case other assets would be $15,000. Now it's time to add all these three subtotals, basically the total current assets, net fixed assets, and other assets, to come up with our total assets. And adding up these three numbers will give us this decidedly big number, $1,120,700, and I will put double line to show that we are done with the first part. We were able to derive our asset side of our balance sheet. So we are done with the first part basically, and thank you for watching.